Hey guys, Frank Curzio here. Pretty crazy day after we really volatile yesterday, right? It was up 900, then down 200, then finished up 1100. Today was kind of like a straight down market, and we're finishing near the lows. 1500 around 6%. We came back a little bit, but I wanted to talk to you guys right now about what I'm doing with my portfolio and what you should be doing right now. Because when you're looking at this market, the first thing you should do is be very patient. If you've been following me in my podcast or my newsletters, you should have a lot of cash on the sidelines. In some of our newsletters, we sold out more than 70% of those positions, much higher. Again, we were fortunate. I didn't think the market would come down this fast, but right now it's very important. It's critical because we're going to see more pain ahead. And I've covered that in past videos. The earnings are going to come down. Goldman Sachs just came out and said another 15% downside. That's only, uh, I have access to this research. Goldman's only predicting a 5% decline year over year in earnings. It's going to be at least 20, maybe more. So I think they're going to be way, way off on that in Q1. It brings the P a lot lower. So we're going to see more pain ahead. There's going to be explosion in cases in the US. Don't get scared. You're going to have your friends get it. You might get it. There's just 800,000 to 4 million tests that are coming out now. They just started testing. We're in the first to second inning in the US. So we're going to see school closures. I'm seeing that from a lot of people, emails I'm getting, kids that are in college and, in schools, and the parents emailing me from my Wall Street Unplugged podcast. We're going to see lockdowns of schools, more school closures, more cities are going to be locked down. New York is probably going to be one of the first. We're going to see sporting events and everything. It's going to get a little crazy. It's going to get a little scary. If you need to know more about that, please listen to today's Wall Street Unplugged podcast. It's going to post in a little while. I interviewed Lenore Hawkins, who's an economist, 20-year vet, great, very, very smart. She's on lockdown. She actually told me she had the coronavirus in December and didn't know it. She's going to give you the playbook of what's probably going to happen in the U.S. So that interview is live. That interview was her on lockdown. It was pretty insane. It's pretty incredible when, I just told her to go over the procedure. How does it work? How does the government react? Are you allowed to get food? Things like that. So it's really crazy. But now let's get to your portfolios, because right now I want you to be patient. There's nothing wrong with being patient. Even if you're patient for 3 to 6 months, you should have cash on the sidelines. But you should be doing more homework now than you've ever done, ever. Okay, even if you're fully invested, because we're going to come up with one of the greatest buying opportunities since the credit crisis, and probably even a bigger opportunity than that. And the reason why is the government is going to do everything in their power. We're going to see fiscal stimulus. We're going to see lower interest rates. We're going to see all this stuff. It's going to get really crazy, right? In the meantime, the coronavirus is a temporary problem. It's not going to be around forever. I'm predicting maybe another 3 months of this. Hopefully I'm wrong and it's less than that. If it's a little bit more, we're going to see, a pretty crazy market until then. But once this risk subsides, we're going to see so many of these stocks trading at valuations where we're going to see another growth market coming, another strong bull market. So for me, I'm screening like crazy for stocks that I want to buy, that I'm looking at. Some of them include high net cash to market cap. Those are ones with strongest balance sheets, where we'll see Take-Two Interactive on that. Electronic Arts, so a lot of gaming companies. You can imagine the biggest technology companies are on here: Facebook, Microsoft, Apple as well. Companies with good balance sheets that can weather the storm. I'm looking at companies that could potentially cut their dividends. I think that's factored into oil companies. I screened yesterday. I have Oxy on this list. They just cut their dividend. Some pretty popular names. I mean, you're looking at Halliburton, Schlumberger can be expected, but Kraft, Goodyear, Briggs and Stratton. So this is based on companies that are paying more in dividends and they generating free cash flow, and those that have a higher dividend payout ratio than 100%. These are the things that are making me, that I want to prepare for now. Also, I'm looking at stocks in the early cycle phase, because when this comes back, you don't want to really own the Johnson & Johnson and Walmart. You want to own the most aggressive stocks that are going to see the highest gains. And when this ends with all the fuel and ejection, think about like a pound of steroids going into like a rabbit or something. That's how crazy this market's going to be, because we shouldn't be putting that much stimulus in the market for a temporary problem. And we're not going to be able to take this stuff back before the election. So 2021 is probably going to be a very, very good year as long as we see the coronavirus subside. So you want to look at early phase or early cycle companies that do very, very well. These are high beta names. So you're looking at PVH, Mosaic, Noble Energy, a lot of energy companies on this list, which I would say, be careful here. DXC Technology, Alaska Air Group. That's kind of, a little crazy, but these are the companies that I'm researching because I want to be prepared. Pro-inflationary stock. We're going to see huge inflation, guys. No matter what, we're going to see inflation. I know it sounds crazy. I know we're all seeing inflation with our bills. The Fed isn't seeing inflation because they look at the CPI, the Consumer Price Index, and that's been around 2%. Anyway, uh, the pro-inflation stocks, stocks that are going to do well in inflationary environments. You have Advanced Micro, a lot of technology companies, Apache, oil companies, National Oil of Arco, Cummins, Apple, Deere's on this list as well. And this is just some of the things that I'm doing where also companies that perform well in low interest rate environments. Obviously, the gold companies, I'm expecting gold to really soar here. It's a perfect environment for gold miners. Newmont Mining's on this list. Take Two Interactive's on this list. Western Digital. So throwing a lot of names at you. I like to keep this video short, but right now you should be doing a ton of work. You should be just looking at all kinds of stocks or all kinds of scenarios because you're going to be able to buy at a huge discount. When this thing turns, somebody just asked me, Frank, when do you think it's going to turn? When you see those numbers that are positive for every country, start going negative. Okay, right now everyone is positive, even China. Once they start going negative, once they start coming down, you're going to see it subside. It's going to be crazy. It's only 17 days in Italy, 18 days since the outbreak, and it's nuts. But we'll see. We'll look at that playbook. It may take a month, it may take a month and a half, but you're going to see people get used to this. You're going to see your neighbors catch it. And once that happens and people are okay, they're going to be more comfortable going out. That's going to be a good time. That's going to be a tell, along with all the stimulus we're going to see in the next couple of weeks and the next couple of months. So, guys, stay patient, but work your ass off here. Make sure you're doing a lot of homework because trust me, it's going to lead to one of the biggest buying opportunities in that credit crisis. If you invested, not even 2009 lows, if you did 2010, 2011, investing in the right stocks returned 5x to 10x gains. That's how you make a fortune investing, by buying low at the right times and then selling at the right times. When we sold at the right time, we're sitting in cash. Now I'm going to tell you when the time to buy is. I'll report back to you guys soon.